Excellent. It is. Let's get that button when that one fires up. It's
This
the
one's going
Tuesday,
slow.
April. All right, April 4th. It's 2023. It's Crypto Flight Path. Welcome. Technical Difficulty Tuesday is the theme for today's broadcast. Haha. All
Wasn't that
right.
bad. Uh, but yeah, no, we are here again on another wonderful day to be in crypto. Looks like Bitcoin, held up again in the 28,200 range. There's something to be said for the resiliency of Bitcoin in spite of everything going on. Uh, Pretty remarkable to watch. It's been kind of a slow news week. I mean, based off the past few weeks in crypto, I mean, you expect to hear something else coming out. Yesterday, there's a guy named Kobe who's a pretty famous crypto influencer, and he had something. I don't fully understand what he did, but it was some rumor about Interpol issuing a red notice for CZ of Binance, which is a red notice is basically an international search warrant, but it was a joke, but the whole market kind of freaked out about it, which just shows you how new we still are to all this. If a tweet like that can move the market, I think Bitcoin fell $1,000, just on that rumor alone, which is crazy. Did you see that?
I did, and when I wasn't, the thing that I was, in hindsight, I was looking for some sort of pullback in price to basically test to see if people were if there was enough market participation that was going to keep us in this range that we've been in for, golly, it feels like forever now. But I mean, we're still in the same range that has been that started to get established back on March 17th. So, and from that point, there's been one big green 4 hour candle on the 22nd of March, and we've been in that range ever since, I should say. However, what's to to illustrate what you were talking about, how the market's ability to absorb this kind of FUD and other nonsense that we see is uh, this $27,000 range up to about 27.3 ish seems to be the spot where a statistically significant number of market participants were there to absorb these several attempts at hard selling that failed miserably, which is good. And uh, you can one other thing to point out: the price of Ethereum. We finally broke above a previous high of, I think, 1858. We touched, I think the high was 1874, which is a pretty substantial move. And it, Paul had a great tweet yesterday showing effectively an ascending wedge pattern that was just super indicative of that a big move north and price was coming for Ethereum. So I think that the we had plenty of opportunity to have some hard selling show up, like, oh my gosh, game over, FUD, FUD, FUD. The FUD didn't work. We got enough people in short that were felt enough pain, and finally we've got these big moves north where enough pain was felt by short sellers that they're either, well, they're being forcibly liquidated, which is not something they choose. It, then so that's one end of the spectrum. The other end, the middle end of the spectrum, is people deciding that it's not worth the risk to be short right now, and that's taking some selling pressure off. And then the other end of the spectrum is perhaps some bias flipping going on, where people that had been short took the death by 1,000 paper cuts over the last 3 weeks and decided that the least risk, or the more probable move coming was up in price appreciation, given the fact that the market was absorbing these very slight moves to the downside, were being met with enough buying pressure to keep the price to keep capitulation from setting in and heading back to 25,000 on Bitcoin's chart. So that's my like armchair market psychiatrist analysis.
Yeah, no, no,
Managed to
no.
take.
Appreciate it. No, it was good. It was good. So today we wanted to talk about basically, get to the basics, right? Like, where do you buy Bitcoin and crypto, and then what happens if your bank is being stubborn and won't let you transfer money, things like that. So, I think the first one that we want to talk about, and this is the one that everybody should know, is Coinbase, right? And Coinbase is pretty simple. And what these things are, we call them exchanges, right? And so, just like you buy and sell stocks on an exchange, you have cryptocurrency exchanges. Now, I believe, and you're starting to see it with Fidelity, is that, and I think you'll start to see it with like E-Trade and TD Ameritrade, is they will offer Bitcoin and Ethereum at first on traditional exchanges, but until then, we've got to use the crypto exchanges. And so Coinbase is the one that's been around forever. This is a publicly traded company in the U.S. It's in the crypto world. You've got a couple different sides that some people love Coinbase, some people hate it. I think Coinbase has done a really good job of bringing assets, especially Bitcoin and Ethereum, to the market, right? And before these exchanges existed, it was somewhat difficult to get these assets. So you can sign up to Coinbase, right? And you have to provide, your KYC, which is know your customer information. And, that's an ID, an address, all those things. They need to know who's buying this stuff. And all this stuff, what's funny about like all this SEC stuff is like, these are already regulated, exchanges, so it's funny when they start to attack these exchanges for, silly stuff that they've already approved. But Coinbase is a great one in the United States and all over the world. They do a really good job, communicating with regulators and different authorities in different jurisdictions, and it's real simple and easy to use. So Coinbase is one that we use. Do you have any comments on Coinbase, Ted?
I do, and I'm glad you started with Coinbase, because Coinbase have been around for a very long time. They from in my experience, I have a pretty interesting breadth of experience with different types of Coinbase users in both or Coinbase usage scenarios that I want to briefly articulate here, because I want to meet the Coinbase FUD in the middle to say that everything or to provide some guidance, perhaps some opinion and a little bit of consumer advice here concerning Coinbase, is to like with all things that you read on the internet. If you're skeptical about Coinbase or you don't really know, I'll urge you to start at Coinbase.com. Read what the company provides in terms of guidance, and there's a mix of marketing, messaging. There's a mix of this is the way we operate, and if you want to operate on our platform, you're going to have to play by a certain number of rules. And the thing that I find most amusing is that there's constituents in the body of Coinbase users. There's a whole spectrum of user types. But if you go on Twitter, or if you read about if you read on forums or people that have, where I'm going with this is that there are people today who are reasonably intelligent, perhaps a bit stubborn, but can read English and are capable of opening bank accounts, getting driver's licenses, operating motor vehicles, opening doors, getting through things like that throughout the day, that seem to have a little bit of trouble understanding some of the basic rules of engagement on a platform like Coinbase. And I'm starting with Coinbase, but what I'm trying to get out here is that you can flip a coin and then go to Google and search for an exchange. You'll find opinions across the spectrum. And the meat of the argument, or the meat of the point I'm trying to get across here, is that starting with Coinbase is a great recommendation in my opinion, because It's first of all, because it's a publicly traded company, and it is incredibly expensive to be a publicly traded company. So Coinbase are putting their money where their mouth is, and they're following all of the rules, despite what you read in the news about the SEC providing them a Wells notice, all this other horse malarkey. They're fully regulated to the extent that the regulatory apparatus is capable of operating and regulating entities. They they provide all of their filings with the government as per a regulated, or excuse me, a publicly traded company, are required by law, et cetera, et cetera. And to get to just like vector right down to the point here is that Coinbase happens to be one of the easiest, in my opinion, because they give you lots of options concerning how to get your money out of your bank account, your US dollars, for example, here in the US, into the exchange. And then you have a large menu of options of types of crypto assets that you can purchase. And they have good security controls. They have good options, or the learning mechanism, the mechanisms that are available for people to ask questions, get support. And where I think people really fall down is that they don't understand some of the mechanics of how money moves using ACH, for example. And the biggest complaint that I've ever seen, this is anecdotal, of course, but the biggest complaints that I see about Coinbase is that when you move assets onto the platform, if you want to move them somewhere else, the people cry victim because they don't want to wait the 3 or 4 days it takes for the ACH transaction to clear. Meaning, if you're going to use ACH and it doesn't cost you anything, but it's costing Coinbase, then they have certain collateral requirements. Meaning, if you fund your account with, say, $1,000 US, and you buy $1,000 worth of USDT, and you want to move that off the exchange to another platform immediately, you may have to wait a few days until Coinbase gets paid. Because what you're doing, you're asking Coinbase to give you money that hasn't arrived in your account yet. And this is one of the things that I think people don't understand today, even in 2023, is that when money moves, your account is being credited by the institution that will eventually receive the money from your bank, but they're doing that as a courtesy. And anyway, that's one of the biggest complaints that I've seen, is that people they act like martyrs, like something is being done wrong to them because they're being forced to wait until their fiat money arrives on the platform before they're allowed to transact it. Their
Well,
crypto
yeah,
assets
and
off
they're
the
all like
platform.
that. They're all like that. So there's a couple different ways to get money from your bank account to these exchanges. You can do what Ted just talked about, an ACH, and whether you're on Coinbase, Kraken, or whatever, you can ACH, just say $1,000, and you can buy those assets on the exchange that day. The issue is the exchange has to wait the 3 to 4 business days for the money to clear before you can take those assets off the exchange. So it's not great for, I wouldn't say, trading necessarily, but like these things are awesome for being able to get money out of a bank, get it into crypto assets, and then take those crypto assets off the exchange and put it into a wallet that you control. Okay. And that's kind of a topic that we'll get into in later videos. Today, we just wanted to talk about the different exchanges, how they work, and some of the differences between them. But essentially, you can ACH your money. It's just a click of a button. You connect your bank account, and the money shows up. But the second you click confirm your $1,000 ACH, you can buy Bitcoin or Dogecoin or whatever it is you prefer that day. You just can't move it until the money clears. Now, there's a second option. You can wire the money from your bank, right? And that's something that I typically do. I'll wire the money to the exchange, and once the money hits, you can use that money instantly and take those assets off that day, because the exchange isn't waiting for your bank to get the money to them. They already have the money in the exchange, okay? And so the exchanges make money in a couple different ways, right? They make money in fees, like, when you buy Bitcoin or Ethereum or something, they take a percentage, right? And they make money when you trade, right? Ted, am I missing anything there? And that's
No,
that's the incentive for these exchanges to exist, right? That's their whole business model essentially. Now Coinbase has Coinbase custody, where that's separate from Coinbase the exchange, where they'll custody assets for individual clients, and they make money doing that as well. But the general principle is, you wire money to the exchange, you buy and sell assets, and they take a percentage as a fee every time you do that.
Yeah, one thing I wanted to add there is just the ACH mechanism takes some time. There's no cost to the end user, and the convenience that's provided is that as soon as you're done with that process, and Coinbase is a great example here, is that they make the amount of money that you've transferred using ACH available to you immediately, so you can purchase. And but remember, the thing I really want to drive home here is that it takes a few days for the ACH to clear and the funds to settle and all of that stuff. But the convenience to you as the end user here is that you didn't, and the most important part here is that you didn't have to call your bank to do a wire. You didn't have to pay the fee. It's 20. If I want to send a wire today, it costs me $26. Okay. For me to send ACH and wait a few days is $0 to me. And that's the disconnect that I have observed again and again and again, is that the instant gratification thing, and we're talking a couple of days here, and that's really the point I want to make sure you understand. There's one other thing that's really important to also know in the Coinbase context. If let's say you send 5,000 USD and you do it ACH and you buy Bitcoin with it. Not financial advice, but that's what I do. When I buy Bitcoin, it sits there for a little while. The ACH clears. Let's say I want to ACH another $1,000 worth of USD to Coinbase. And let's say in that very moment they make those funds available to me, I buy USDT and I want to move that to my cold wallet, for example. Maybe there's no good use case for that, but let's say that's what I wanted to do. Because I have some assets that have cleared on the exchange, I'm able to send that USDT immediately, even though that ACH hasn't cleared yet, because I have some collateral on the platform. So that is just good business, a business that is protecting itself from being taken advantage of by certain types of bad actors in the world. And unfortunately, the bad apples do spoil the basket for the rest of us. So all I'm trying to say here is that when you understand the convenience that's being offered by you being able to use the ACH mechanism in the first place, I think that goes a long way. The second is if it's not fast enough for you, then you're going to have to cough up the money to do a wire, and that's not always convenient for the average person, in my opinion.
Yeah, no, that's a great point. And to kind of walk you through why this is important, okay? When you have money sitting in a bank account, you don't own that money. The bank owns that money. Okay, so what we're essentially doing here, and what Coinbase or Kraken or any of those is allowing you to facilitate, is moving money, which is quote unquote the bank's money, even though it's yours, you have an IOU from the bank. You move that money from the bank to the exchange. Okay, and when you buy Bitcoin, let's just stick with Bitcoin for right now, and you can apply this to other cryptos, but it defeats the point. You buy Bitcoin on the exchange, and then you move that Bitcoin to your self-custody wallet, whether it's a hot wallet or a Ledger or Nano or a cold wallet. That money is now in your control. You are the bearer asset owner. You have complete control over that money. And that is something that is unbelievably powerful, especially in today's age, that I no longer have an IOU from the bank. I have a scarce digital asset that I own, that I can move at my own will anytime. And I think that's something that gets lost on the Elizabeth Warrens of the world. And maybe it's not lost. Maybe they know exactly what's happening and they don't like it.
Oh, they know.
Right? Yeah. So what these companies do is they facilitate. That is what this is. That is what we're doing, right? That is, you are in control of your own destiny. And so because they facilitate this in such an easy and clean manner, they take fees, and they do things like, you have to hold the money in there for 3 or 4 days while you wait for the ACH to clear. No big deal, okay? But that's the general idea of how exchanges work. Coinbase is great. Let's get into, Kraken is another one that's great if you're in the US. They've been around for a while. Exact same principle as Coinbase. I've used Kraken in the past. I've never had an issue with them. They have always been stand up. They were one of the first to come out and basically say, hey, look, you have to show, proof of reserve, but then you also have to tell me what liabilities you have as a company if we're going to have transparency in the crypto industry. And by the way, the bank should do this too, right? I want to know that if I'm using your exchange, that you are solvent. Same with the bank, right? This should be 101 for, everybody. But they were the first to come out and say, hey, look, if you're going to say proof of reserves as assets, you got to show me your liabilities too, because if you don't show me your liabilities, it doesn't mean anything. You could have 100 billion in Bitcoin and 1 billion in liabilities and you're insolvent, right? And so those are, what I'm referring to here is trust. Trust is earned over long periods of time. And Kraken, in my opinion, is Coinbase and Kraken are both exchanges that I trust. That doesn't mean I leave money on them. So there's a difference there. I'll leave money that I buy, crypto over, month-long periods of time, but I never leave crypto on these exchanges, right? I'll move it back if I'm selling it or trading it, but I don't leave anything on these exchanges because we've just seen time and time again, that things happen fast, and you don't want to be in a position where you've gone through the effort to understand and do the work and understand what you're actually doing when you buy Bitcoin or crypto, and to leave it on an exchange exposes you to counterparty risk, which is the exchange, which is the entire purpose of this is to get away from counterparty risk. And so while I trust Coinbase and Kraken, I still make it a priority. And Kraken, the former CEO of Kraken, Jesse Powell, will come out and tell you, do not leave this stuff on my exchange because it's a liability for me. I don't want you to. And that to me earns trust, right? And that's why I like Kraken. I've used it in the past. But do your own research. But I think Kraken's another one. Do you have any comments on Kraken, Ted?
I do. I think they're pushed the envelope a little bit with regard to making bold statements like the one you just shared from the CEO about do not leave, or it is in your best interest, end consumer, to self-custody your digital assets. And that's one way to say, take your Bitcoin and your other crypto that you can move to a cold wallet or a self-custody wallet, take it off of our exchange. And I really, one of the underlying concepts here is this thing. The whole idea of assets and liabilities is, for the every person, is not super clear. So one way to articulate the asset thing, I think, is somewhat clear. It's like an asset is something that you take possession of or that you own. Like a chair that's in your house could be considered one of your assets, unless you use a credit card to buy it and you haven't paid it off yet, for example. I mean, you have possession of the asset, but have you taken ownership? No. But we'll stay out of that rabbit hole. What I'm trying to go here is that people think that when you take your cash, or when you have your US dollars, for example, when you have that deposited, like a payroll check, or if you take 5,000 US dollars and you take a wad of cash to the bank and you deposit it, you think, oh, well, I'm putting my money in the bank and that's good for the bank. But it actually, the deposits into a bank are considered liabilities. And just, I'll pause for a second. Am I saying anything that gives you heartburn when I say that?
No, I
Okay.
don't. Yeah, for the purpose of this conversation, no.
So a liability is something that the bank owes you. So from the bank's perspective, the deposits are liabilities. And we've seen again and again and again and again over periods of time how certain types of banking institutions that operate in a fractional reserve nature, or they are fractional reserve operating entities. Take them, take deposits and do other things with them. And then when you log into your bank and you're looking at numbers on the screen, you're just seeing numbers. And the point I'm trying to illustrate here is that when you take your cash to the bank, or you have your money, your US dollars deposited into the bank, you, they're not really in your possession. Uh, they're 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 over here in this banking institution's account, in a manner of speaking, but you really don't have possession of your US dollars in the same way that if you were to buy Bitcoin, move it from an exchange wallet to a cold wallet that you have custody of and control over. This idea of self custody is still something that is, I would argue, a very new concept in our society, and it's kind of like coming full circle as a nation where we used to possess our gold and silver, our base layer money, and we would deposit it into a bank for safekeeping, and then we would get paper notes to transact with, and then we could redeem the paper notes. But the point is, there was a base layer component there, and it was gold and silver. But now we have this idea and this concept of being able to actually take possession of digital assets and have custody over them and control over them in a way that we have not been able to experience in a very long time. That was my
No,
point.
nope, got it. No. It's a great point. Great point. It's always important to remember that when you think about what we're doing here. Okay, so next one is Binance.us. Look, here's where it gets interesting. People can do their own research. Binance has Binance, which is they operate Binance.com, which operates globally in a lot of countries. They have a separate one called Binance US. Here's another one where you can buy and sell different assets. Same principle as Coinbase and Kraken. Binance has been around for a long time. Binance catches a lot of controversy because the CEO CZ. I'll flat out tell you, I don't trust Binance like I trust Kraken and Coinbase. I've used Binance US and Binance.com back when we could. The reason you might want to use Binance US or Binance.com is because sometimes they have different crypto assets that Coinbase or Kraken have not listed. Okay. And so it's the same principle here, though. As long as you can always get in the habit of self custodying your own assets, these exchanges are fine to use, right? Your risk of moving money to the exchange, buying the asset, and then getting it to self custody, I don't know that it's really material. Your risk is when you start to hold these assets for long periods of time on these exchanges, any of them, okay? And I would say that's I guess that's the lazy way to do it, right? You've gone this far, you've taken the step, you've done the work to learn about these assets, and there's one more step, and that's self custody, okay? And that's what we really want to get through to people is, all these exchanges are tools, and Binance operates globally, and they've got a U.S. version. I know there's certain states where you can't use Binance U.S. But Binance is another great option. Another one is we'll do these two, Ted, and then I'll let you hop in. Is KuCoin, and then KuCoin is an exchange that actually has been around forever, and I like KuCoin. That doesn't mean that I leave a lot of assets on KuCoin, but I will use KuCoin to buy different crypto assets that might not be available on other exchanges, and it's one of those things that you can get in, you can make an account, and you can just rock and roll. And KuCoin has a lot of neat features on it that you can't have on Kraken or Coinbase. And so it really comes down to preference, but you have to do your own research. These are just four that we wanted to show today that all operate in generally the same way. You can wire or ACH money, and then you can also transfer different crypto assets between these exchanges. So there's been times that I've moved Ethereum to KuCoin to buy assets because the asset was only paired in Ethereum, right? And so that is where this gets interesting, right? Because that you can do 24/7. You don't need to wire, you don't need to wait for a bank. But, it's one of those things that I want to be real careful here, because you have to understand what you're doing and what risk you're taking when you move money to and from these different exchanges. But Ted, do you have anything to add to Binance and KuCoin?
With regard to, so I'll start with Binance. The .com is the global entity that operates, or is set up to operate outside of the reach of the United States regulatory apparatus. Uh, Not to necessarily make a one-to-one comparison to FTX.com, but in the same way that FTX.com was only available to people outside the United States, and FTX.US was available to people inside the United States, there's Binance.com and then there's Binance.us. So I make that comparison simply to illustrate that there are different entities that are operating under a similar corporate banner, perhaps like a brand identity more than anything else. The the Binance US, excuse me, apparatus or operation, I should call it, is bound because it allows U.S. citizens, people domiciled in the lower 48 and Alaska and Hawaii. They allows them to the citizens to legally set up an account, follow certain rules that are necessary when you operate on U.S. soil, in a manner of speaking, and that's great stuff. The thing to remember is that you can buy the digital asset that you can purchase on Binance.us is the same, not always the same, but they're like Bitcoin, or yeah, I'll just stick with Bitcoin. The Bitcoin that you buy on Binance.us is the same Bitcoin, or is the same fun. It's fungible for Bitcoin that people buy on Binance.com or Kraken. I always say Kraken, Kraken, or Coinbase, or any exchange. Uh, just remember, the exchanges are not the assets, and the assets are not the exchanges. They're completely separate things. You can move your assets from exchange to exchange, from wallet to wallet. Uh, you may have to play by different rules depending on where you live around the world and the exchange that you use. So that was my thoughts on Binance. The KuCoin, I think, is very interesting, and I really like. I've come to. I mean, I thought it was nice when I first learned about it, but I've learned to like it more because of some of the things that are available. Not just in terms of like tradable assets or mechanisms that you can use to participate in the crypto ecosystem, but I think I think KuCoin's account security is one of the best that I've used. They have a really great mechanisms to allow you to stack and combine certain capability to keep your account safe, and I think that's a really important thing to be able to give people the ability to have more than one layer of defense in the fight to keep your crypto assets safe.
No, I think that's a great point. And I think, it all comes down to people doing their own homework and understanding, the risk you take when you use these different exchanges. Binance, or I'm sorry, Kraken and Coinbase are U.S. based companies. Binance and KuCoin are not. I think Binance is based in Malta, and I think KuCoin is in Singapore, I want to say.
I think
But
so. Yes.
yeah, that all comes down. But okay. So here's one slight difference when you, and this is really important. Okay, so when you use KuCoin, at any point during the year, if you have $10,000 or more on the exchange, you have to file a special. It's not a report; it's just a box you check on your tax report saying that you held over $10,000 on a foreign exchange. Okay, these are things you have to just consider. But again, that's why I say it's important to do your own research, because if you don't do that and you get audited and they see that you had $12,000 on KuCoin in 2023 and you didn't report that, I mean, I think there's pretty huge fines that come up with that, right? But those are just things you have to speak to your accountant about and understand when you do this. All right, and so I think that's a good rundown of the basic exchanges. There's a lot more. The important thing you want to remember is, the whole point is to self custody your own assets. So if you see an exchange like Robinhood or another one that lets you buy crypto but doesn't let you remove it from the exchange, I would just stay away from them. There's no point in owning. You never really own the asset as long as it's on an exchange, right? So until you take it off the exchange, you don't technically own it, right? And so I don't know how you feel about that, Ted, but I typically stay away from. I've never bought Bitcoin or another cryptocurrency that I couldn't remove to self custody.
Yeah, I am in the same boat where I believe that the end goal for us as sovereign individuals is to take custody of our digital assets. And however, I know that there are people in the world that don't necessarily understand it or don't have a desire to take those steps. They're comfortable enough, like the Robinhood users of the world, that it's enough for them. This is not a judgmental thing and not a knock. I'm not saying this to be negative. It's enough for them to be able to use a platform like Robinhood to buy the things they want to buy, and the the fact that they live in their account on the Robinhood platform checks the box, and that's all good. And the reason I think that is okay for some people is, we grew up in a manner of speaking with uh, buying stocks as in the early days of understanding stock trading. We never took possession of the paper shares in the early days, or physical stock certificates. And this idea of not taking possession of your stock certificates early days is somewhat a bedrock. I think that as we moved into the digital age, in the world of finance and the world of owning a piece of a company and being able to buy shares of stock in companies and participate in the financial system that way, it was just understood that you log into your brokerage account. The brokerage they have your best interest in mind mostly, and they're gonna be the custodians, or they're gonna hold your assets for you. I mean, if you really want your paper stock certificates, you can get them, but the ease of being able to buy and sell quickly with digital representations of stock certificates, and now with crypto, your digital asset is custodied at the exchange, meaning they move it from one bucket to another, and it just has your name on it and that kind of thing. Those are the, people are comfortable with those things, and I don't know what has to happen necessarily to get people to be more interested in taking possession. I think it's partly the learning gap, and maybe some contingent are
It's a
they don't
cycle.
want to be. Yeah.
It's a cycle. So last cycle, whatever we had happen in 2017, 2018, we had a whole new group come in the last cycle. This whole new group learned about, counterparty risk and holding your assets on exchanges with FTX. We'll go through another cycle and we'll have, 5 times as many more people, and they'll learn the lesson too, and it'll just repeat, and there's not a whole lot anybody can do about that, because unfortunately there is fraud in this world. And when you talk about fraud, let's talk about the money laundering operation of FTX. Okay, here's a great example. I used FTX to buy Sushi, all right, which is a DeFi token. It was the only place I could find it, right? And so what did I do? I created an FTX account. It was super easy, super fast, all right? And I went in, I transferred, I think I used Ethereum to buy Sushi. So I transferred Ethereum from my wallet to FTX and then swapped that for the Sushi token. Immediately after I did that, I removed the Sushi token from the exchange into self custody. Okay, and this was 2 years before, a year or two before it collapsed. But when it collapsed, didn't matter to me, right? I had the digital asset in self custody, and it wasn't on the exchange. And I didn't use FTX a lot. I can't say that I was one of those guys that was sitting there pounding the table like FTX is not good. I just got lucky in the sense that look, I've got exchanges that I use that I like, and FTX really didn't do a whole lot for me. There were really smart people in this industry that managed funds for others that lost their entire fund because they left it on FTX. Right now, how does that happen? We could go into a lot of different ways that happens, but if you're an individual or you are running money for other people, you have to be able to get your money off the exchanges, right? And that's just rule number one in crypto, right? And like you said, I don't know how people learn that, but that's the game we play, right? And if you've got money on exchanges, like right now, I have a certain amount of cash sitting on an exchange, and I use that cash to buy assets over like a dollar cost averaging time. It's not a lot, but I know in my head that that exchange could go down, and that's a risk that I'm comfortable taking. But I know any dollar or any crypto on those exchanges is subject at any point in time to loss, because that's a counterparty risk, and that's a risk that I'm willing to take based off trust with some of the exchanges I've used for a long time. Do I trust them enough to hold my assets? Absolutely not. Now, you can talk about Coinbase Custody, which is a separate, different entity than Coinbase the exchange. Would I trust Coinbase Custody? Probably. But I still, because I'm an individual, would rather custody the assets myself, right? And there's all kinds of security measures you can do with that. Like for me, for instance, I don't have access to mine for the most part. The majority of mine is spread, they call it geographically. I'd have to go to 3 geographical places, 4 geographical places, 5 to move it, right? And so there's a lot of things you can do to kind of protect yourself too. And these are, things you learn as you go through your journey. But the main point is, you want to self-custody your assets. So I think with that, we'll hop into, I wanted to talk about a couple other things too, because you could say, okay, Josh, great. But I don't want to go through all that. I just want to own Bitcoin on my self-custody wallet. Well, there's a lot of ways to do that, and it's called over the counter. Okay. So OTC, and there's, Cumberland is one group where you can call up Cumberland. And this is more so if you have larger amounts of money and you say, hey, Cumberland, I'm Josh. I want to buy $100,000 worth of Bitcoin, and I want you to send it directly to my, here's my address, and the address is connected to your, cold storage self-custody wallet. All right. And so what you do is you sign an agreement with Cumberland, and you hop in a Telegram channel, and you text Cumberland and say, I want $100,000 worth of Bitcoin. They give you the price. You respond within a certain amount of time that locks you into the contract. And then there's a set of instructions you have to follow to complete the transaction. In this way, you never have to deal with an exchange. Okay, so you wire the money to Cumberland. Cumberland sends you the Bitcoin directly. Pretty smooth process, right? And I think that's a good option for people that don't want to go through the process of setting up an exchange and just want to get straight to the point of self-custodying these assets. This is something you learn over time. And so if you're sitting there scratching your head going, what the hell is an OTC? What is Josh talking about? Don't worry about it. Just know that these options exist. Another option is that you can use, for Bitcoin specifically, a company called Unchained Capital. All right. And what you can do with Unchained is Unchained has a feature, same thing as Cumberland, that you can set up your bank account, and this is what's something called a multi-sig. Okay, so you have multiple Bitcoin keys that give you access to your account. And again, you can separate them geographically, and there's all kinds of things you can do. But the main point here is that, like Cumberland, Unchained will allow you to set up a Telegram channel, same kind of rules. Hey, I think their minimum is I forget what their minimum amount of Bitcoin is you have to buy, but it's not 100 grand. It might be 5 grand or 2 grand or something like that. But you say, hey, Unchained, I want 10 grand worth of Bitcoin. Same thing, set of instructions, the wires and the escrows and all that stuff. You complete that. They send the Bitcoin directly to your cold wallet address, which is very, very nice. You don't have to deal with exchanges. You're not taking any counterparty risk. It's more of a transition. So this is something you can do if these exchanges catch shit from the SEC or the government, and there's a period of time where you can't buy or sell. And then on the other side too, Cumberland and Unchained, you can sell your Bitcoin. So you say, hey, Cumberland, hey, Unchained, I would like to sell 2 Bitcoin. They'll give you a price. You agree, yes or no. Process works in reverse. So there's different ways to do this. A lot of ways to skin the cat. As you get into this, you can learn more and more about this. And as you progress through your crypto journey, there will be more options available too. So, we're always learning. Ted and I are always learning. This is stuff that, I didn't learn until a year or two ago, right? And because you look at some of the things and you kind of have to think ahead, what could happen, a lot of things, something interesting that happens with Coinbase, and here's the reason that I looked into this, is when the market gets really hot, Coinbase always mysteriously shuts down. All right. And it's like, it's a joke in crypto because things are going, things are moving when Coinbase stops working. And so I want to be able to, if we get to a position where Bitcoin goes parabolic, and I know based off what I've studied that this is way overbought, like the people are getting irrational, and I want to be able to exit some of my Bitcoin, right, position, because I've been doing this for a long time. I've got a number that I want to hit, and then I'm going to sell a portion of it. And while I don't want to sell Bitcoin, why I say I'll never sell Bitcoin, I look at this as long as we still operate in the world that we operate in today, which I can't say will happen. What it does for my position is it gets all my cash out, and then I own X amount of it for essentially on the house. Okay, that's something that I've decided to do, and it was a long time ago, and I'm going to stick to that plan. All right. But the reason I decided to sign up for some of these programs is I don't want to rely on an exchange to be able to exit my position. Okay, if Bitcoin goes to $500,000, right, and it's there for 3 days, I don't want to have to send the money from my cold wallet to the exchange, pray to God the exchange stays solvent, and then hope that it can come back. No, I want to be able to get on Telegram, text Cumberland or text Unchained, and say, hey, Bitcoin's crazy right now. I want to sell. What are you gonna, if it's at 500,000, they might say, 480, and I'd probably say sure. I'll sell X amount of Bitcoin. We enter the contract. I send the Bitcoin. They send me the money. I don't have to worry about the exchange being wonky. All right. So there's a lot of things to consider when you do all this. And 95% of the time, you'll never have that problem, right? And so when you're just getting started, it's not necessarily something to worry about. But as you progress, it's definitely something to think about. Ted, do you have any comments on any of that?
I think you made a good point, or you made good points about, like, as you get further down the rabbit hole or get further along in your journey and understanding the Cumberlands and the Unchaineds becomes much more clear, the value proposition to us as sovereign individuals or people that want to be more sovereign, and what it provides and why you should consider it. It's not for everybody, but the point I'm trying to get to is that there's a menu of options available to us at whatever stage you're at. And just circle it back around to the top, the Coinbases and the Krakens of the world are a great place to start here in the U.S. because you have on your side of the coin, pun intended, you have some very, very important things that are operating in your favor. Coinbase being publicly traded, Kraken being as resilient as they are and aligned in many ways. Yes, they're a for-profit enterprise and they have their own interests to maintain, but they publicly they go on the record publicly with things like, make sure you're self-custodying, take your crypto off our exchange. Don't take the counterparty risk that is the nature of the beast when you're working with other parties. So if you're early stages of your journey, it's worth taking some counterparty risk to get involved and participate so you can learn. And then over time, as you learn, you can then start becoming more self-sovereign. You can take possession. You can do it several times and get comfortable with the process and learn and understand what's really like, what's the landscape, what's life really like, what happens from day to day, month to month when you're participating in these markets. And wanted to touch on a couple of interesting things. When Coinbase has an interesting problem, in my opinion. They're wildly popular. A lot of people know Coinbase. They want to use it. And I would say that the biggest number of participants in the Coinbase world are people that tend to be reactive in a sense when they see that something is happening. Elon Musk tweets something or something happens in the news. There's always this like contingent that flock to a platform like Coinbase or to Robinhood. Robinhood has had plenty of issues, and we can do homework there too. What I'm trying to illustrate is that Coinbase have done a look. Not every platform is going to be able to sustain an influx in the way that Coinbase receives an influx of traffic, and sometimes it's you're not able to trade in these specific moments, but we don't really have any control over that. But what we can do is we can be more, or I would encourage, or what I am doing is I'm encouraging people, if you're new, think about being a little more strategic. And what I mean by that is when you see some news event come across the wire and you think, oh, I should go to Coinbase and I should try to buy this token right now. Maybe pause for a second and say, am I going to be competing with 40 billion other people all trying to do the same thing? And maybe if there is a token that you're interested in or some other crypto asset, maybe think about it in terms of, should I buy? Should I wait for a better buying opportunity? Or if I don't know, should I ask someone that might be able to tell me, am I making a mistake? Am I trying to do this at the, what would you consider the wrong time? Understanding no one has a crystal ball, and you have to be able to, at some point, be able to make these decisions for yourself. But really, just to summarize, is being more strategic as an individual about when and where and what you're buying. And the issues with Coinbase always get resolved. They always do, and it takes a few hours. But if you go back and look at Twitter, for example, you would think that it was the apocalypse again and again and again over time as these things occur. And they do their best. But as somebody that myself, having worked in software and tech for a little over 25 years, I mean, you do your best to build systems and make them available to the public. And a lot of times all you can do is react when there's a big traffic event.
I had a story before. The only people that will know what I'm talking about are I guess we're OGs now, but before Coinbase Pro was Coinbase Pro, it used to be called GDAX, okay? And I was sitting in Prague, I was traveling in Prague, and this is in November of 2017. And I had, I think I had like $30,000 that I was trading. I had bought Bitcoin at like, I don't know, $8,000, and it went up to 9 or 10. And I hit the sell order and the fucking thing froze. And I remember I sat in my room in Prague for 7 hours. I was supposed to go out and meet friends, waiting for that thing to unfreeze to see if the order went through. Because at the time, I was traveling, and that was most of the money I had to travel the world, right? And so right when I hit the button, GDAX froze for like 7 hours. And I didn't know if the order went through. I didn't know if it was gone. I didn't know like anything. And that scarred me and seared in my brain so bad that I was like, I'm never going to be in that position again. And so what it taught me, and I'll tell you this, I'll flat out tell you, if you're chasing Bitcoin or any of these assets when these exchanges are going down and the prices are going up, you're making a massive mistake. That is not the time to buy this stuff, right? People like me who have been around for a while are selling you that stuff because we know it's overvalued, right? Like that's just how it goes. Not to say that it doesn't have value, but what these markets tend to do is they typically move, 2 to 3 standard deviations above or below, the mean. And what you look at is if Bitcoin is trading 2 or 3 standard deviations above the mean, it's probably a good time to sell some. And so we're not talking about dumping worthless shit on people, right? Because a lot of times people in crypto, they say dump your bags on people. I like this argument because it's fun. It's like, if I sell you something and the price goes up, does that make me a good guy, right? If I sell you something and the price goes down, all of a sudden I'm a bad guy, right? Like that's the like, look, we are independent decision makers in markets, right? You may have information that I don't have, right? But I'll never forget that story of, that feeling of being absolutely stuck, nothing I can do. I just have to wait and pray that this transaction goes through and I can get my cash out of this thing. Now, looking back, I realized how naive and stupid I was. Some of the things I used to do, and that's why we, want to start this channel, is to try to help people avoid some of those mistakes. Like, I would never be in that situation ever again. But, you learn, right? And that's how you progress and evolve and don't make the same mistakes you used to make. But yeah, God, talk about a sinking feeling in your stomach. Like, I was like, I'm going to have to go home. I'm going to have to go, back to selling real estate. Like, it's over. I can't believe I screwed this up. Like, like I'll never forget it.
Well, first of all, that's wow. I bet there were pucker marks on the chair after that experience.
It was a quiet evening.
I bet it was. It's just not excited that happened for you or anyone else. But
it worked out great. It was all good.
Well, they're glad to hear that it worked out well. All's well that ends well, mostly. But there's an arc here. Is that the early days are mostly behind us. There's still some early days type things that are happening in the world, in the crypto space, but the resilience and the energy and effort of the Coinbases and the Krakens of the world have largely tackled a lot of these persnickety technical issues that were like I mean, what I'm trying to spit out here is that in 5 or 7 years ago, if there was any uptick of significance, it caused big headaches for the people that were operating these systems, because they didn't know how to respond to the demand. Those, and it's kind of a chicken or egg problem. You've got an organization that has a product that people are willing to pay for, and you're able to generate substantial revenue. What do you build next? And a lot of times, demand or demand response is something that can only happen after you've seen demand, and demand can show up anytime and it can dissipate at any time. And like they used to say in old Rome, the crowd is fickle, and you never know when the crowd's going to show up. So largely those technical challenges have been resolved, although they still show up in interesting ways. And a lot, we'll never really know how the sausage is made behind the scenes, but what we do know is that there's things that we can do as individuals to stay, and I'll wrap this up, to stay aware and have a good mind for managing our counterparty risk and doing everything we can to take possession of our assets.
Yeah, and I'll add this too. When you're first starting out, you don't think this is a big deal, because you might have $100 in crypto or $1,000, and you're like, oh, whatever, it's not a big deal. Here's why it's important: because over time, with this asset class, it will turn into significant money. Okay, and what you want to be in a position of doing is establishing best practices when you start, because it's really easy to get comfortable and just say, oh, it's fine, I'll just leave. Oh, it's only 1,000. Oh, it's 20,000. Oh, it's 50,000. No big deal. Let me tell you, $50,000, even if you're a multimillionaire, is still a lot of money. Okay, and so what you need to get in the practice of, and what I would recommend you do, even if it's $50, learn how to buy it on an exchange and then move it into a wallet you control. When you first start out, you don't need to go and get multi-sig wallets. You don't need to go and be ultra sound and ultra secure. Look at this as an evolving journey. Your first step is download a cold wallet. Like, you could use, there's a lot of them out there, and we'll get into some of those and show people how to do that. But the first thing is to learn to buy Bitcoin, move your money from a bank to a crypto exchange, and then buy the crypto asset and move it into a wallet you control. Okay? Just do it. Just learn. And once you learn, it's better to make a mistake with $50 than 50 grand, right? So I would urge people to start best practices as they get into this. Now, can you buy Bitcoin? Can you buy $50 on Coinbase on your app and watch it for a couple of weeks and learn about it? Sure, whatever. That's better than nothing, right? But if you can get the idea in your head, the whole point of this exercise is to be able to control your own money and control your own destiny. It's really, really important, because as your journey progresses, you're going to find that that is really the key thing about crypto, Bitcoin and crypto, that separates it from other asset classes. So that's where I wanted to wrap it up. It's been about an hour or so. I think that was a good kind of overview. We wanted to show you some exchanges. We showed you Coinbase, Kraken, Binance, KuCoin. There's a lot of other ones. Do your own research. Be careful. Always take your money off the exchange. There's some OTC desk like Cumberland. You can OTC through Unchained. Casa is another one. Also a lot of different options there. So I think that'll do it for today. As always, do your own research. Do not take anything that we say as financial advice. If you use these exchanges, you're doing it at your own risk. I have no idea and neither does Ted, if these exchanges will be around in a week, a year, 10 years. You got to do your own research. But with that, we'll call it a day. We'll see you